stock market has completely taken off into the stratosphere over the past 5 years, and I'm seeing an increasing amount of old people still working at Target, which means two very crucial things. One, the rich are literally, statistically, numerically getting richer while your money is getting eaten up by higher egg prices and unnecessary tariffs. And two, you're just leaving free opportunity on the table by not taking part in the market at all. So that's where I come in. I've obtained offers from the world's top financial institutions for my understanding and analysis of financial markets. And I want to guide you through some of the basics so that you can catch up with the loser maxing Elons of the world. So let's address the elephant in the room, the question that I've been asked the most. So like, how do I do it? There are 3 things you need to get started. Only 3. There's 4, I lied. Number 1, what the fuck is a stock? Owning stocks or shares is just having a percentage of ownership in a company, and as that company makes more money or its future growth looks more promising, your ownership in it or your stock becomes more valuable. I'm skipping over a lot of shit because I want to keep this video as short as possible, but as a stockholder, you're entitled to a lot of cool perks and benefits, so look into it. Okay, but how do we actually buy and sell, or to keep it simple, trade stocks? Brokerages. Think of brokerages like strip clubs and stocks as strippers. Like, this makes sense. You go into the brokerage, see what stock you like, and take her to the back for a dance. I'm assuming that's how strip clubs operate because that's how they operated in GTA. Brokerages are the main place you're going to go if you want to trade stocks. You can also look at other things about a company or see how your portfolio of stocks is doing as a whole. Some popular brokerages include Robinhood, Fidelity, and Vanguard. Download one of these apps and create an account to get started. Also keep in mind that brokerages have fees to buy and sell stocks. That's their main mechanism of making money. The size of the fee depends on how much you're buying or selling. Now that you know what a stock is and where to buy it, we got to get into the fun part. ETFs and index funds. I wanted to talk about these before getting into the individual names like Apple or Google for 2 reasons. It's beginner friendly and less risky. Think of an ETF or index fund as a basket of different stocks. When you buy an ETF or index fund, you're buying a little piece of every company that's part of it. There's an ETF for damn near every industry and country, and it's meant to represent how the industry or country is doing economically speaking in the present and for the future. For example, the index that tracks the US economy is the S&P 500. It's a basket of 500 of the most valuable companies in the US. This is not financial advice, as I am not a professional yet. Since you are probably just starting out, I would suggest investing in an ETF of an industry that you're familiar with, or the S&P 500 if you believe the US economy is going to continue growing in the future. ETFs are so special because you don't have to do a shit ton of research on one company, and it's less risky because you're investing in multiple companies. In the case of the S&P 500, those companies can be in different industries as well. So let's backtrack a little bit back into the brokerage apps. Let's say you open up Robinhood and you want to find a stock like Apple. Hit the search button and either type in the name of the company or its ticker symbol. For Apple, its ticker symbol would be AAPL. To look up ETFs or index funds, you would do the same thing. SPY to invest in the S&P 500. If you're not sure what the ticker symbol is for what you're looking for, look it up on the internet. 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 If it still doesn't show up, the company is probably private and you can't publicly buy its shares. If you made it this far into the video and you're still watching right now, go ahead and like the video. I will fucking hit you. I feel like people get really scared of investing in the stock market in general because it's not a very tangible thing, and because they aren't aware of the ease of passive investing into ETFs and think that they have to pick stocks in order to start their journey. Low-key, stock picking is scary as shit. I'll keep this part short as well because I literally cannot do a deep dive into stock picking. That shit is so much work. General tips. Pinche puta negro. I learned a lot of cuss words in Spanish over this past spring break and I wanted to use it. It's only my 3rd day out here. If you're starting out, I wouldn't advise picking individual companies, but if you just say fuck me and do it anyway, choose companies that you use regularly / are comfortable with because you can better conceptualize the business. I cannot stress this enough. Invest in a company you know the business of, not because of the hype. Big tip number 1, the market is inherently risky to compensate for the higher average reward of an 8% annual return. I say this because you're going to see some large fluctuations in both up and down directions, especially since we got a new president in office. But when those things happen, it shouldn't cause you to panic buy or sell because you're probably going to stifle your returns. In fact, more active portfolios tend to make less money than if they just stay stagnant. Tip 2, don't invest in something because your friend is investing in it or because it's super hyped up, like Nvidia. Respecting some of my friends' investments, this type of rationale for investing is going to cause you to make the mistakes that I outlined in tip 1. Is because you don't have a solid foundation for your decision making. So every large market movement is going to shift your entire thought process and may lead you to make irrational decisions. Tip 3, part 1. If you are going to trade a stock based on recent information or news that just came out, make sure that you have confidence that that event is going to have a material change on the business. Like it's either going to foundationally change the business or heavily impact it. I think one of the best CEOs alive right now is is Tim Cook of Apple. He has done an incredible job with this piece of shit company that overcharges me for a fucking adapter. Bitch, $20? Suck my dick, bro. I personally don't think anyone can do as good of a job with Apple as Tim Cook. Let's say Tim Cook dies. Some people might buy Apple stock because they didn't believe in his way of business. I'm selling. Tip 3, part 2. Please read some news and stay informed on both company specific events and the broader environment of what the US is doing. Because what the fuck are we doing? Psst. Morning Brew and Financial Times newsletters. They take 5 minutes to read each, and they're very comprehensive and sometimes funny. Listen, I even fall into the traps of having poor decision making sometimes, but it's better to start investing into the market than not doing it at all. Learn some more about economics so that you can make better investment decisions by watching this video. If you want to hear a crazy Uber story, watch this one right here. Peace, peace.